up, folks? Anonymous Trader here with my second video to YouTube. We'll be talking about market structure in this one. The previous one was on horizontals. Make sure to check that one out. The link will be in the description of this video. But in terms of that, if you're not in my Discord, tap into that. There's unlimited free PDFs, notions on like the fundamentals of trading, the technicals of trading, really just the basics to get you guys started. And yeah, I'm gonna put a little pop-up here on what we should be taking away from today's video, which I'm not sure if I mentioned, but it'll be on market structure. This little pop-up here, pause the screen if you need to, get a little understanding of what we'll be going over in this vid. It's honestly phenomenal how you can really break this down. So you can see here we got this continuous uptrend, okay? We got this higher high, we put in this lower lower, higher low, come in, new higher high, new lower low, new higher high, new lower low. Okay, so the trend is trading bullish, and like that's very easy to tell. Not that there's not shorts given, there's multiple shorts given, but essentially the market is producing a higher chance of or not chance, but a higher percentage of buys than sells. And within that within these higher highs and higher lows, you have to be able to identify, okay, we're putting in this, we've now identified this ascending wedge, and we can see that it's failing to take these highs and get that breakout. So essentially, with the market also being at the high, you don't short lows and you don't long highs. That's from like the absolute worst thing to do as a trader. So coming into new highs, why would we be thinking to buy? That just doesn't make sense. So essentially, coming into these new highs, you should always be looking to short. Coming into these lows, you should be looking to buy. That's just from a trader's perspective. Okay? Now with that, we've identified that uptrend. Now what broke this uptrend? Okay? Consecutive higher highs, or higher lows, sorry, and higher highs. Now, with this move from this high, if you didn't catch this initial high, this is where you could catch your next entry. Would be your breakdown. Okay, so now you have a lower low put in from this previous low. So you have a high, a lower low. Now you have put in a higher or a lower high. Sorry, the words kind of confuse me. But looking at this now, and we could have identified this from a simple CC pull, I'm sure. Oh yeah, look at this. And I'm going to go over this in a different video. I'm just trying to break down market structure for you. So now we've switched from this uptrend to now putting in a local high, or not a local high, it's on the daily time frame, but a high with a new lower high. So now that short would have been great to take to new lows, which we do have here is new lows. And new lows then again led into another consolidation phase. Okay, and within this consolidation phase, you don't long, or you don't look to short lows. Essentially, coming into this previous support here, you would never ever look to short this. Like, that's just a really stupid short. Sorry, there's a fucking helicopter or something going above me. And essentially, now within this, we've put in this new consolidation phase. And if you're able to identify this consolidation phase, you can pull a new breakout channel. Okay, and I'm showing you this because look at the patterns that tend to break to the upside, and look at the patterns that tend to break to the downside. Yeah, we know it's at a low, so trading this descending wedge to look for shorts at lows is just not probable. We know that the buy scenario is way higher of a chance here. What happened? Okay, we've now changed. I'm going to show you the change of market structure here. So now we went from putting in higher highs, higher lows, to lower highs and lower lows. Okay, continuing with this consolidation phase, staying range bound. Boom, broke out of this descending wedge. Okay, took this high from right here. Okay, did we not? I hope we can all see that. Got a back test of this previous support after making a new local high, changing the market structure from that bearish to back to bullish. And now we've created a new low down here. We've created a new high. We've created a new low. And we've created a new high up here. Now once again giving us a new consolidation phase here that we can identify, a descending wedge that led also to the upside. And like You wouldn't really want to be looking at this to the short side until what we've seen acceptance back within this support level here. Like, I know this is a messy chart, but I'm really trying to get you guys to understand what we're looking at here on how the market really and why it's doing what it is. So now you can kind of see your bullish patterns, and okay, so your bullish patterns are your descending wedges at lows. Your bearish patterns are ascending wedges at highs. You're putting in these multiple highs, which essentially we did back at this high as well. But now I want to get into some more local. Let's go into right here. So this is what I want to get at. We'll go to previous time, just recently in December, or like November, when we were coming into those new lows around 15,000. Okay, so looking at the chart here, I traded 60,000 all the way down. My mentor is Chart Champions, so you can go check the stats. We had short 60,000 all the way down. I'm just looking for my chocolate milk. One sec. Don't know where it is. All right. So now me knowing trading the pattern down, it was pretty simple, to be honest, because I knew that I was just looking for the bearish pattern. So like we were continuously putting in those. We'd come down, consolidation, okay, we'd put in that high after making we put in that higher high but failing to get that breakout back up. So I kind of just had the perception that shorts would print, and they ended up doing, and back within like this range as well. Like I remember seeing this same setup as well here, and we had a channel pulled from thing. I know we had a level up there as well, and we had shorted 47,000 down to, for me, I shorted it to 20,000, which was my biggest trade to date. But I'm just trying to show you how really understanding that these patterns can really benefit you in the past, and like even now, and I'm going to show you how. So me noticing this, we had these consecutive same little trends here. I'm going to stop using the brush to be a little bit more professional. So these are more channels, as not as much wedges and descending or ascending wedges. But what you can look at here is the same thing over and over again, and then you get this. Oh, it's beautiful. It's beautiful. And this is how I was able to identify these lows. Okay, so now you can kind of see we're getting the same trend on the whole way down, and nothing really changed. It was pretty simple trading it down. And now when we came into these new lows, everyone's fucking tripping. No one knows what to do. No one's thinking logically. We're at super lows. Everyone's thinking it's going lower. There was a lot of people that missed out on opportunity here and got fucked, and just because of not understanding technical analysis, market structure, and the simplicity of literally just understanding the technicals of the charts. So me, what I had noticed is this trend was slow, and I noticed it back here. I'm not going to say I caught the low at 15,000. I caught the break of structure from here. I'll show you. I have a note. I'm going to go over this in a different video, but that's what I had caught. And I just want to show you how this low was really easy to identify. So just with your highs failing to get that breakout, this low, at this low, we were continuously failing to get the breakdown. So like it didn't try to go lower there, but it at here tried to go lower, holding. It got that push down. It didn't get that push down too much. It just made a new low just to fake some people out, grab some liquid. And what we're doing here is now we can identify that we're putting in this new kind of looking descending wedge. Okay, and what happened with the descending wedges in the past? They all broke to the upside. Okay, now not only with that, I'm going to go over this in a different video as well, but with that descending wedge, we noticed this immaculate down move, which I actually did catch, and I'm not going to complain about it. But with this in the chart, when you see something like this, okay, and you know that just as quick as it came down, it can come up. It's like the simplest trade you can take, and all you have to do for this is simply mark the first entry of support here. What you can see here, we got that back test, okay, boom, rejected, came back up, flipped, and what did it do? It just came right for the highs that it previously took. But how to identify this for like a market structure thing is, you can see the break. We're putting in these lower highs, okay? Continuous lower highs, boom, boom, lower low. It's trending bearish. What happened here is at these lows, everyone went short. As I just said, we got that breakish structure. Boom. We now, not from this high, well, you could have said this high, but when we were to put in this high, we now have a new higher high on the chart, okay? Boom. Now everyone's tripping here. At highs, people are longing, then it dumps, okay? Putting in just a back test of this previous range, okay? Boom, heading for a new higher high, remaining bullish, okay? Coming in for that dump, okay? That's what also had everyone confused. And what happened here? All we're doing is putting in a new low. I didn't catch this low, I'm not gonna lie. That's a trickier low to catch, but I'm just explaining what happened here. So now we have this low, coming up, putting in a new high, putting in a new low, remaining with the trend. Boom. Now what happened at the high here? Okay, how could we have caught these highs, which I am currently in, and I'm going to show you how. So now we've identified that we're trending up. Now locally, what we can see again is this take for highs again, failing to get that breakout. That breakout's kind of a bit nicer, but what we can see here is this. If you didn't originally catch this high, which I didn't, because I seen that candle right here and I just didn't like that. It looked a little strong for me. So I had waited. I waited patience. I got my setup, and I'm going to show you how. So now we've got this, boom, we've got this change of market structure, okay? We've now went from trading bearish over here to now we're trading bullish. Local market structure has switched, okay? Boom, now we've got a new high here. Now what happened? Locally, if we want to look, we're going to go into the 4 hour here. Got the 4 hour. Okay. Looking at this now. After this high, we've then seen, and you don't want to be, once again, like your chances of longing this high versus shorting is you short highs, you long lows. This is a high of a chart. This is the new local high. You don't want to be shorting that. And I'm going to preach that. If you can understand that as a trader, you're going to be already more successful than half the other traders in the fucking world. But looking at this, so now originally we've got this high, continuous highs. We're keeping this, and I'll even show you this. So like, just this simple right here. So we're holding this higher highs and failing to break this level, but a level that it consolidates under resistance in an uptrend that's continuously making higher lows, that's not showing any sign of strength. I got this long. I longed this because I caught that. I had seen that. I seen that we were consolidating under this local resistance here, and we were continuously making a higher high, and there was no change of market structure. So I had bought that, taking profit at this high. I didn't short this high though, and I'm going to show you where I shorted right here. So originally coming into this high, boom, taking profits. Now we're waiting, not longing up here, as we know it's the high of the chart, and there's a way higher probability of it coming down than going up. Okay, it came down. We've now put in a new low down here around 27,000. Looking at the chart, okay, we've now locally switched the market structure. You can see that we went from trading bullish to now locally trading bearish. Now, that does not mean you short these lows. That means we have now put in a new low, and you can look for a channel or a range to be put in, which was put in just perfectly. And if you come look at this, I didn't even short these highs. I'm going to show you why. I'm going to show you which high I shorted from a technical standpoint and like a setup wise. Sorry, I just lost my train of thought there. These brushes are kind of a bit wonky too. So now we've changed that higher high, changed the market structure to locally trading bearish. What happened? We came in, put in a new high. Okay, at these highs, I identified this. So I seen this, boom, put in this. We're now had this kind of range looking thing. All right, boom, boom. I didn't trade that wedge, essentially, but I had seen this, so I knew that this was a high. I knew that this made a lower low, so I knew that the chances, and I'm gonna do a video with the CC as well. Oh my god. Okay, and the CC is a very respected level, and this is where I would have taken, and this is where I actually took my trade off of for this one. But I just want to show you here. So now we've got this triple top at the top here, very strong resistance level. If you're trying to short this after locally putting in a new low, about to put in a new local lower high, it's just not, your probabilities of longing this are slim, as we're at a new high. You want to short highs and you want to long lows. Okay, boom. I initially got that down move, putting in a higher low, not really changing them. It hasn't put in a lower low just yet. We're putting in this consolidation, and what I seen here for the freest short in the life of shorts was this. That same continuation of that higher highs, failing to break that, get that breakout, okay, came right back into previous resistance. From a technical standpoint, this is a very high probability trade. I put a decent bit of risk on this, and it ended up paying out quite well, and I took a profit a little down at the low. I'm still sitting in it now, and I'm waiting for that change of market structure here, and I'm gonna explain that right now. So boom, from this high that I initially took my short from, we now put in this new low. Okay, now we're still trading bearish right now locally, but overall on the higher time frame we're still trading bullish, because we have this low, this high, this low, this high. So you'd put a question mark right here. Boom. Okay, so locally trading bearish and overall trading bullish. So how do you trade this? Okay, now this is where it gets fun. Oh shit, there's people here. But now you can look and go, I just totally threw off my train of thought. So overall, shorts are printing right now, and what would be the synapses to change that? So coming into this low, we know that this is a low, a new low put in. We wouldn't be shorting a new low, and with this range right here, I'm gonna get rid of the brushes. Okay, so we got this new low put in. Overall trading bearish right now. Now what we're looking at here, we have this little triple bottom that we can see here. Essentially it's a little consolidation phase. You'd want to be long from the low, and you'd want to be short from these highs. So the only short probable in this case would be from these highs right here, stop loss above these highs, and that's like just probability based. But overall, because we have just put in a new low on the chart, I would be looking, and my bias is overall buys, as in just because that's what, like, it's just from a trader's perspective, it's gonna it's longing the lows and shorting the highs. As much as I'm gonna say it sounds like silly, but like it's the most important thing to grasp. So now we can see that this low is here, and without even showing the levels that you should have, you should see that we've got this little channel, and it's why would we short the middle of a channel when there's a higher probability of it going up, and let's short the high of the channel to get that higher probability trade, regardless if it's up here or here. I'm just showing you from a drawing perspective. But your overall, the higher confluence trade would be shorting this high, okay, waiting for the low to be put in around here, continuing that uptrend to then buy, or yeah, like you just really gotta look at it like that. And then more locally here, like a local change of market structure would be like this. If we were to see how we've got this pattern here, and we got this local resistance there, a local market structure change would be taking this high right here, boom, putting in a new high, getting a back test, and then heading up for higher, and then we'd look to short up here. And that's a much higher confluence short, or higher probability short than trying to short this low right here, because as we know, this is at a low. We see this triple bottom type thing, and yeah, that's it. This video might have been confusing, but I really hope that you guys can grasp the market structure in terms of things. It's very simple. It's not too difficult. You just gotta understand higher highs, higher lows, consolidation. You gotta be shorting low or shorting highs and long and lows. And obviously every trade is not gonna hit, and a low. And if you obviously at a low it could go lower, and at a high it could go higher. But the probability of a trader from a trader's perspective of just longing those lows and shorting those highs is 100 times more probable. But yeah, that's it for this video. I'm gonna have a new one coming out probably later this week. If you have questions, make sure you join the Discord. And yeah, have a good day, people.